Hey guys, in this episode, I'm giving you my thoughts on this current crypto bear market. I'm also going to talk a little bit about the future of cryptocurrency and my 5 plans for 2019. So before we dive in, as you guys know, I'm not a financial advisor. This isn't financial advice. So please don't buy or sell based on anything I say in this video. This is just my opinion on these markets and what I'm doing. So like I said in my last market update video in August, I wasn't convinced that Bitcoin was at a bottom yet, and I expected things to get a lot worse before they got better. And here we are at the end of 2018, and so far that's turned out to be true. But what I want to do before we dive into the charts is just talk to you guys, specifically those of you that came into crypto more recently, meaning like after 2015, because that means you haven't been through a full boom bust cycle yet. And if you haven't seen my 5 phases video, I'll link that up below, where I talk about kind of the 5 phases of the crypto market cycle. And that's why also I did a video last year before the crash trying to help people really prepare for the bear market. And I get a lot of people that ask me pretty much every day, like, Chris, if you're so bullish on Bitcoin long term and you believe in the technology, why do you talk about bear markets? Why do you talk about shorting it? Why do you say that 90% of ICOs and startups in the space are going to fail? And that's because I view the crypto markets through the same risk management lens that I do for high risk investments. For example, I tweeted this week, I said, I view crypto investments under the same risk management lens as traditional early stage venture rounds, meaning high risk, a good chance that it goes to zero with a lower probability of a massive payoff, right? So high risk, high reward. And you got to be okay with losing 100% of any individual position. That's why position sizing is everything. So what I mean by that is, even though I'm bullish long-term on crypto, and I think that Bitcoin and or other cryptos are going to change the world, in the meantime, it's not going to be just a smooth ride. This is the most volatile and the most emotional asset on the planet right now. It has happened to be, for the past 10 years, also the fastest growing market on the planet, but it's not going to be a smooth, easy ride. That's why I talk so much about risk management in my videos, because I have kind of a front row seat to this, where I see so much emotion and so many people just making like really insane risks, right? And when it comes to position sizing, what that means is sitting down and thinking about what percentage of my portfolio makes sense. What percentage of my risk capital could I put into crypto? And then out of that, where do I divvy that up, right? Where I see a lot of people that kind of swing for the fences and risk money that they really can't afford to lose. And that's why I really got uncomfortable last year when Bitcoin went from 8,000 to 20,000 in a few weeks, because I knew that was purely fueled by speculation, right? The greater fool theory. And we've talked about this so much in past videos. And I haven't been doing a ton of videos because I feel like a lot of the things that have needed to be said and a lot of the lessons that I've learned from earlier market cycles are the same things, but people just don't want to hear that, right? They want to think that this time is different. And that's why when I went on CNBC last year and said that I was selling some of my long-term holdings around 5,000, that's because the price was up over 2,500% from 2015. So in just 2 years, it was incredible growth. And I look at things from a risk to reward standpoint, right? So when markets go up and you make a ton of money, you have to take some of that off the table. At least that's how I think about it. So with that said, let's take a look at some charts. And I want to show you some analysis that I've done on these market cycles going back to like 2012, okay? So there was a bubble in 2011, but the actual trading volume was like super low, so I'm not even going to count that. But you can see here in mid 2012, the price went from about $5 up to 15, call it $15, and then crashed back down to about $7, right? So you can see right here, crashed and then recovered, right? And this was the first like real market cycle. It was about 3 to 6 months for this little boom and bust pattern to play out. And then here in early 2013, we ramped up again and price went from about $20 to over $250 and then crashed back down to about $60. So had initially over an 80% drop. And then this one lasted a little bit longer, 6 to 9 months for that market cycle. And then fast forwarding into later 2013, we went from about $100 to over $1,000. And then this took a full year to deflate to where it eventually hit a low here around $150. And this was about a 15 to 24 month market cycle, which was about 2.5 times the actual time of the prior market cycle. So as the prices and the growth becomes bigger on a nominal and percentage basis, also the time for these market cycles to play out grows as well. So what happened in 2015 through this year is we had another market cycle where, and it depends on where you start this at, but really so far we've been in this since late 2015 or early 2016, and price went up over 2,000% from the all-time high here once it broke above 1,000 and it went to 20,000. That was about a 2,000% run. And if we assume, and again, this is a big assumption, but if we assume that this market cycle is going to last as long as the prior market cycle, that means that we could hit anywhere from about now through mid 2020, right? So that means that there could be up to a 60-month market cycle or a 5-year market cycle. And one thing that's interesting is where that lines up in mid 2020 is the halving for Bitcoin. So the next time that the block rewards are going to drop is estimated to be in mid 2020. Now, what does that mean? If you're not familiar with the halving, basically every 4 years, the amount of supply of Bitcoin that gets released gets cut in half, right? So we saw that in 2012. Right. So back here, we had a halving. Then in 2016, kind of at the start of the last market cycle, that's what kind of kicked off and fueled that market cycle. And so what we've seen over the past couple of halvings is people start to buy in anticipation of that. So right now, we're still in the 5th phase of this latest market cycle. And what could happen is somewhere inside of this time horizon, we could do one of 3 things. So I really see 3 potentials for the future of Bitcoin's price. So the first potential is either start a new 5-phase market cycle somewhere in between now and the next halving, or number 2, we're going to start to see BTC, as we know it, either lose favor or have some kind of flippening with another cryptocurrency. And what that would look like is, you know, Bitcoin would lose its dominance as number 1 in the market cap, or we would just kind of see like no real accumulation phase kick in where we just get kind of a gradual sell off. Or number 3, and this is really the most interesting to me, is a black swan event that could either be bullish or bearish. Okay, what does that mean? So a black swan event, for anybody that doesn't know, is a fundamental event or something that happens that catches most people off guard. So a bullish event, meaning something that we would expect price to go up for Bitcoin, would be something like another global financial crisis, or a country with a big population that has some kind of currency crisis, and then people like pile into Bitcoin or another crypto asset as a flight to safety, right? Something like that. Or in the bearish scenario, something where there's, some kind of attack on the Bitcoin network, or a government bans Bitcoin, or something that we can't really predict right now. I guess you could hypothesize and come up with all these crazy ideas. But the fact about a black swan event is you don't know that it's happening until it's happening, right? It's like, oh crap, something happened in China or India or the US and billions of people are responding in this specific way, right? So that's kind of how I think about the future of this. Is I wish I could make a prediction with a definite time frame, but that's not how markets work. I wish I could place my will on the market and say, hey, I expect the market to bottom out at this time on this date and do this. But the right way to think about this is to look at things from a possibilities and probabilities perspective. Think about all the possible outcomes, everything that could happen, and then place weight on what you think is most likely to happen. So another thing I think about when it comes to analyzing these market cycles is what was different this cycle compared to last cycle. And the first thing I think about is market participants, right? So like, who were the people buying and selling? So in 2013, it was mostly crypto nerds, right? It was early savvy investors and traders, and it was, cypherpunks and people that were really into cryptography and that stuff early on. Most recently, this last boom and bust cycle kind of hit the mainstream, right? This was the first time that like CNBC was talking about crypto every damn day. We also had all of these ICO projects that raised a ton of money. And you had more of a global focus on this as well. You had people in different countries that were piling in for different reasons, but it was mostly fueled by speculation, where the first bubble, or the second bubble in 2013 rather, was fueled by a big speculation in China, right? So what I think, and this is why I've always been so kind of bearish on ICOs as a whole, is because A, lot of them were just blatant scams, but B, even the ones that are good projects that have ethical people behind them and that have raised a lot of money, like I still think that 90% or more of those are going to fail. Now, why is that? Well, let's just look at this. I've always liked this article that talks about the top 20 reasons why startups fail. The number 2 reason is they run out of cash, right? So something that I've been thinking a lot about recently is when you have the price of Bitcoin and Ethereum, which a lot of these projects raise capital in, when this is down, that means the capital that these startups have gets diminished by 70, 80, sometimes 90%, right? So now you have ICO projects that are a part of the market participant pool, right? So even though I think that over the next couple of years, we're going to see a lot of failures, I think there are going to be a handful of these companies or projects or whatever you want to call them that come out, and 10, 20, 30 years from now, we look back on and say, wow, do you remember when the big boom of 2018 or 2017 happened and how a lot of stuff died off, and these were the ones that survived, right? That's where my mindset is right now. So just to recap again, talking about Bitcoin, I really see 3 possible scenarios for the next 1 to 3 years. And that's kind of the time frame I think in, right? I'm not super short term. I don't day trade anymore. It's very difficult to predict, at least for me, more than like 5 years out, but I can kind of look at trends, and kind of my sweet spot is looking for that like 12 to 36 month time horizon. And what I see for Bitcoin is really 3 possibilities, right? Either we go back into another 5-phase cycle where we exceed the prior high, or something happens where there's either a flippening or there's another crypto that takes dominance, or we just start to see like a long kiss of death in the price action. Or number 3 is we have some kind of black swan event, meaning something that happens in the near future that we can't really predict today. And that's either going to change my outlook on Bitcoin, either bearish or bullish, right? So I like to stay open to those possibilities. And then what I do is manage my risk, meaning my different capital buckets, according to those possible outcomes. So I hope that's helpful, guys. Again, if there's one thing that I've really been pushing for the past few years in crypto is risk management. Don't just go all in on some project that you don't understand. Don't chase hype. Understand market psychology, understand market cycles. And that leads me to what I'm going to be focusing on in 2019. So over the next year or so, there's really 5 things that I'm going to be focusing on and really investing my time and energy and capital in. And the first one is obviously Bitcoin and crypto. I am still holding cryptocurrencies, and I am being very patient with the next accumulation phase when that does kick in. And I think that will kick in once we finally see aggressive capitulation like we saw in late 2014, right? When the negative market sentiment hits a fever pitch and enough people have rage quit and all of the tourists, as we call them, have exited crypto, that's usually where the bottom is. Number 2, going into next year, I'm actually extremely excited about security tokens. Now, recently I did a video talking about what security tokens are and how that's different from kind of the Wild West of the ICO stuff. But on a very basic level, security tokens are just like legal cryptocurrencies, right? They obey the current regulations that are in place. And the reason why I'm so excited about security tokens is because A, they're backed a lot of times by hard assets. And I'll link up an article in the description that talks about a harbor that recently raised a $20 million round in student housing in South Carolina. And from what I understand, probably 3/4 of next year's security tokens are probably going to be backed by real estate. Also, we're going to see some like startups raising security tokens. And I just think that is so much more sustainable, right? When you have real companies, in some cases backed by real hard assets that are raising tokenized fractional ownership in a way that fits with current regulations, that is just so much more sustainable than this Wild West of people putting a white paper and a website up and saying, give me $10 million, right? So that's number 2. Number 3 is I'm basically done actively trading as many altcoins as I can. In the markets, and the markets are always evolving, right? You go through periods of time when the right play is be active, take as many trades, all the opportunities that you can. And then there's periods of time where the right thing to do is hit the brakes, pull back, and conserve capital, right? And I talk about this all the time, that the idea of surviving first, then thriving. First, learn how to survive in the markets, and then you can expect to thrive. And the biggest piece of that on a practical application is knowing when to press the gas and when to hit the brakes. I'm excited about security tokens, but I don't think that's going to be like a mad rush where like you have to just rush into security tokens. I think it's going to be a little bit slower of an evolution, but that's kind of number 3, is just really focusing on longer term plays, at least in over the next couple of years. And number 4, I'm actually stepping up into a more active role in a venture capital firm that I'm a part of. And I really haven't talked about this a lot on my channel, but I'm actually a venture partner with a venture capital firm, which means I'm an investor in startups, and the firm that I'm a part of is raising currently a $50 million fund. And so my goals over the next few years with this is really twofold. Number 1, I'm helping incubate new startups and working directly with entrepreneurs, helping them understand what it takes to get funding from angels and venture capitalists, and actually having like more of a hands-on role in helping that happen. And number 2, also helping other investors that want to become angels or part of a VC firm learn the right way to do that and learn the right way to like think about risk management in the startup sphere. And the 5th thing that I'm going to be focusing on over the next few years is really what I'm most passionate about, and that's helping other people become financially free and take advantage of our most valuable asset, which is time, right? If you're doing something every day that eats up your time that you're not happy with, you got to make a change. And right now I realize that there's a big divide between accredited investors that are going to have access to some of these security tokens and what I think are going going to be some of the biggest growth markets over the next few years, and people that are not accredited investors, or basically they're not millionaires yet. And my goal is to help people get to that level, understand what it takes from having, just a good foundation of personal finance, learn about entrepreneurship, learn how to be a responsible investor, right? And not get taken out of the game. And so that I'm going to be doing a lot more content over the next year about personal finance, creating multiple income streams, responsible investing, stuff like that, to help people that want to become accredited investors get to that level. And again, I have my own philosophical beliefs around the whole accredited investor thing. And again, I'm not a financial advisor, but I really am just passionate about helping people get to that level to where the average person can get access to the highest growth potential deals. So that's it for this episode, guys. Hopefully that wasn't a little too long-winded, but I know it's been a while since we've really dived into the crypto markets. I hope this is helpful. Again, stay safe. Learn to survive first. If this is your first boom and bust cycle, maybe you learned some hard lessons through this. Maybe you're just getting into it and you're kind of seeing some of the hard lessons that people have learned before you, right? It's always easier to learn from others than it is to learn the hard way, right? So if you have any comments or questions, feel free to leave them below. Have a great holiday season, guys, and I look forward to seeing you guys in 2019. Take care.